Good afternoon, ladies and gentlemen. My name is Michalis and I'm the market analyst here at HF Markets. And I'd like to welcome everybody to the NFP live analysis. So we've got NFP results, which are coming out in 20 minutes time. But before we actually start to look at the results, we've arranged a certain setup to get people prepared and make sure that everybody understands and is confident about how to potentially look at the market throughout today's announcement. So we're going to start off, ladies and gentlemen, with a very quick presentation. Now, the presentation is not going to be the standard presentation, which is all looking at theories. Of course, today is an event. We need live analysis, but this is just a very quick presentation for individuals to fully understand exactly what is the non-farm payroll and what has happened over the past 5 days, which is affecting the market, because there's been so much volatility and so much development over the past 5 days. Whether we're looking at economic announcements, whether we're looking at the employment sector, if we're looking at the monetary policy, because we have big changes in the monetary policy outlook. For example, with the Federal Reserve, but also other central banks. For example, the Bank of England yesterday had a very big turn of events, and we saw a lot of volatility both yesterday and today with the pound. So we're going to be looking at what is the non-farm payroll in order to ensure that we fully understand how potentially to trade it as part of today. So later on, when we're going to be looking at major US dollar currency pairs, when we're looking at US equities, indices, stocks, and even commodities and metals, we need to first understand what is the announcement. And then we're going to look at fully understanding what has been happening over the past 5 days. We're, of course, going to be looking at technical analysis and looking at different ways to determine how the market is potentially going to develop throughout today's session, but not only throughout today's session, in the week ahead as well. Now, before we start looking at today's webinar, very quickly, I want everybody to fully understand that, of course, here at HF Markets, we are looking at investments. Now, no matter what it is that we are trading and investing in, whether we're investing in currencies, whether it could be potentially commodities or equities, of course, it is an investment and we have no control over how the price is going to develop. But what we do want to do, of course, is give you as much educational material and knowledge as possible in order for you to be able to be active and trading in the financial trading markets with confidence, with knowledge, and of course, expertise. And this is what we're going to be looking at as part of today's webinar. I want to go through the introduction slides as quickly as possible because I want to go straight to looking at today's analysis, straight to looking at the non-farm payroll figure, what the announcement is going to mean for the US dollar, for gold, and for equities. Now, I want to spend as little time as possible on this. I do think it is a little bit important to know a bit about the individual who's providing you with this information. Like I said, my name is Michalis. I am the market analyst, one of the market analysts here at HF Markets. A bit about my background: been in the market now for 10 years. Originally a financial advisor in London, and been a market analyst now for 6 years. Like I said, I don't want to spend too much time as part of that slide because we're, of course, looking at a live event. We're very limited. We've only got 15 minutes until the event is announced. So let's go into some very basic details in terms of what is the non-farm payroll figure and what information we have had this week so far, which may help us to determine what kind of release and reading we're going to see today as part of today's market analysis and today's announcement. So let's start off with the very, very basics, mainly for individuals who have never traded. As we start to go forward and carry on throughout the webinar, we of course will go more and more advanced. Now, what exactly is the non-farm payroll figure? The non-farm payroll figure, ladies and gentlemen, some people may know it as NFP, some people may know it as non-farm payroll, some people know it as NFP Friday. NFP, non-farm payroll, is the exact same. One is just the abbreviation. What exactly, though, is the NFP? The NFP, ladies and gentlemen, is basically the change in the number of employed individuals in the United States of America. Now, you have to always remember, when we're looking at the financial trading markets, there's always the vital 4 pillars, which is going to determine economic conditions. And of course, economic conditions will determine how the price of all tradable assets are likely to develop. Now, these pillars, of course, include the employment sector. If somebody is going to be investing in the US dollar, if somebody wants to be investing in a company which is in the US and based in the US, they, of course, want it to be backed by a strong and stable economy. In order to do so, you, of course, need aspects like a high GDP figure, high inflation, and, of course, a strong and a resilient employment sector. So this is why this event is so important and going to create so much volatility in a couple of minutes. So the non-farm payroll figure will confirm the amount of the change, in employed individuals in the United States of America, excluding, of course, certain sectors, which is why it's known as the non-farm payroll figure, because, of course, it doesn't include the farming sector, for example. But this is the most important employment data, which is released globally and, of course, which is released in the United States of America. Now, some people, when they look at non-farm payroll Friday, NFP Friday, people think the most important thing and the only important thing is the non-farm payroll figure, but this isn't correct. Normally, we have three economic releases. Today, we're actually going to have four economic releases, but we're going to concentrate on the most important, which is the employment data. But we have three releases. Yes, we have the non-farm payroll figure, which confirms if there has been less or more employed individuals in the United States of America within the past month. But then we have two further releases as well. We have here, ladies and gentlemen, also the US unemployment rate. I've got a lot of questions, by the way. I've got some individuals who are saying, "What's going to happen in today's news?" This we're going to look at really as point number 5 in the upcoming slides, and then we will go to look at a potential bias for the day as well. We're going to be looking at, for example, bond yields. We're going to be looking at the price of the US dollar. We're going to be looking at components of certain indices, and we're going to look at this information to develop a potential bias of potentially what is going to happen later on. So please bear with me. We will be looking at this, of course. Then very quickly, we'll go through point number 3. We have the US unemployment rate. This is also extremely important, can create a lot of volatility. It's very easy to understand. It is the rate of unemployed individuals in the United States of America. And then the third is the average hourly earnings. Now, I have an individual here who's saying, out of the three, which is the most important? Now, traditionally, of course, the non-farm payroll figure is the most important because the more employed individuals in the United States of America, the better. Because if you've got more employed individuals, of course, the debt is declining, consumer demand is increasing, the revenue of tax income, of course, is increasing as well. We're looking at a more stable economy. And of course, if month after month after month, we have strong employment, a strong non-farm payroll figure, of course, the average hourly earnings is going to increase and the US unemployment rate will decrease, which of course is extremely positive. So keep in mind the non-farm payroll figure traditionally is the most important. Now, between the US unemployment rate and the average hourly earnings, it can change. It depends on the economic conditions within the market. For example, if you're looking at very high inflation like we were, not at the moment. Inflation is high, but it's not extremely high. At the moment, it's not that inflation is high. It's more that there's still a risk of it increasing to become high once again. Whereas if we're looking at 2002, 2003, it was extremely high. So something which was very, very important and creating a lot of volatility was the average hourly earnings. This was the most important announcement. Why? Because if we've got high inflation and everybody every single month earns more and more and more, people will spend that capital. If your spending increases and the consumer demand increases, then of course everybody and all producers and sellers and shops and companies will be more tempted and more willing to increase prices. If they keep increasing prices, then of course we've got higher inflation. So this was the most important announcement. Now inflation is to a certain extent under control, but still at risk of increasing. Something which is very important is the US unemployment rate, especially that silver lining of 4%. If we're looking at 4%, it could be the difference, ladies and gentlemen, of anything above 4% can convince and pressure the Federal Reserve to, of course, alter the monetary policy. And this, of course, is exactly what we're referring to in point number 4. Now, somebody keeps saying to me, what is potentially going to happen today? I'm looking at all these comments. We've got so many comments. Thank you guys for all the comments as well, of course. What is going to happen today? What's going to be today's announcement? Point number 5 can potentially assist. It's not going to guarantee the price move. It's not going to guarantee the volatility. It's not going to guarantee the results, but it can give us some assistance. Now, there's certain things we need to take into consideration. Number 1, of course, during the Christmas period and coming up to the Christmas period, usually the non-farm payroll figure increases. So, for example, and especially temporary workers as well, and contract workers. For example, in November, October, people really start to hire as we come up towards the Christmas period. Now, the Christmas period has come to an end. A lot of individuals, either in this month or next month, will have either their contracts end, or if they're part-time, have it terminated, and so on and so forth. So this is one thing that we need to take into consideration. Point number 2, the JOLTS job openings, which confirms the number of vacancies in the economy, which was released on Monday, the first half of the week. That was very high. So the question is, ladies and gentlemen, is vacancies high because there's less employed individuals? Have a lot of people left their job for whatever reason that may be, and because of that, vacancies has increased? Or is it increasing because there's very high demand, strong economic data, a very strong economy as well? So this is something we need to take into consideration. We've come away from the Christmas period, which normally is extremely busy. And then something else we need to take into consideration is there's a lot of vacancies in the economy. We don't know why there's a lot of vacancies in the US economy. It could be 2 things. Either people have left their job, or it could be potentially that there's high demand. Now, if people have left their job, it's an indication potentially that the non-farm payroll figure may be lower. Something else which was released on Thursday, yesterday, weekly unemployment claims increased. That is again an indication as well. Why is there more vacancies and more people claiming unemployment benefits? The other thing that we need to take into consideration is the ADP non-farm payroll figure, which came in 51,000 less than the previous month. Now, the ADP non-farm payroll figure is not the same as the NFP figure. It's not such a strong indication, and it doesn't cover the whole of the economy. So keep in mind that is only can be used as a slight indication. It's not guaranteed. So the fact that we've got these 4 factors, weekly claims have increased, the ADP non-farm payroll figure has declined, JOLTS job openings have increased, and we're coming towards the end. We're now moving towards the end of the very busy period, the Christmas period. So are we going to get a lower non-farm payroll figure? We don't know, but it's, again, looking at a potential bias for the day. So I've got somebody here. Can somebody help me with the non-farm payroll figure today? Of course, keep in mind, we're going to go to the actual release and the charts in a couple of minutes. We've got 5 more minutes. Keep in mind, we're not going to stay on this presentation. We're going to go and look at analysis live. Next, something which has been a very strong development this week is, of course, the Federal Reserve. The Federal Reserve's forward guidance, their monetary policy statement, their rate decision, and of course the press conference, which was extremely important. Now, what exactly is the FOMC? Because this is what has again and again been spoken about today. It is basically, ladies and gentlemen, the committee in the Federal Reserve. It's made up of 12 members, and they vote every single time on if they should increase or decrease interest rates. So it's extremely important. At the moment, they have been voting to keep interest rates unchanged. But the chairman of the Federal Reserve actually came out and he said, yes, we're looking to keep interest rates unchanged, but we're not looking to cut interest rates in March. And then he was asked more and more questions, and it became more and more apparent that there's not a possibility of interest rates being cut in March unless there is a clear deterioration in the employment sector. And of course, we're going to get the answer to that question in a couple of minutes. We're now going to see, is there a deterioration in the employment sector? Because if we're going to get, for example, today, something unexpected, it's currently expected that unemployment will slightly rise. If it rises more than expected, and it rises to, for example, 4%, and that's really a scenario where potentially we're looking at there being a potential cut as early as March or May, in which case potentially the US dollar can decline, equities can also increase in value as well. So this is why the monetary policy and the Federal Open Market Committee is so important. Okay, and it can have create a lot of volatility. So we've already got confirmation. We know from the press conference last week, a couple of days ago on Wednesday night, that there is going to be interest rate cuts. We know that the market was not pricing in those interest rate cuts correctly. A lot of people were pricing in 5 to 7 interest rate cuts this year, whereas now we know it's more likely to be 3 or 4 interest rate cuts this year. And we also know now that I can see some questions. I will answer these in a moment. We also know that it's not going to be an interest rate cut uh, as early as March. So before we start to carry on with the presentation, I'll end the presentation, ladies and gentlemen, because we want to start to look at today's announcement and what kind of price movement is likely to create within the market. So very quickly, the announcement will happen in 2.5 minutes. The average hourly earnings is expected to come in slightly lower than the previous month. Now, keep in mind, 0.3% is still extremely high. It's much higher than traditionally what we should be seeing in a stable and balanced economy. I've got some questions. Should I buy or sell gold? Should I buy or sell silver? Should I buy gold? Please keep in mind, in 2 minutes' time, we will go to the charts and you'll get a better understanding in regards to that. Now, of course, if this figure here comes in lower than expected, then, of course, it is positive for equities and it's negative for the stock market, and it's negative for the US dollar. The non-farm payroll figure is expected to decline compared to the previous month. If it comes in lower than this, because we did state there is a possibility that it's going to come in lower than this, then if it comes in lower, the US dollar can potentially see a strong decline, and also equities can significantly increase in value potentially. Last, we've got the unemployment rate. It's expected to slightly increase. Previously, it has consecutively again and again stayed at 3.7%. If it stays at 3.7% again, it can support the US dollar. If it's going to rise, though, ladies and gentlemen, if it rises to, for example, 4%, guys, it's really going to create a very strong indication that actually potentially there's going to be interest rate cuts in March in the next meeting of the Federal Reserve, in which case the demand for the US dollar potentially can decline and equities can perform better. Why exactly is equities going to perform better? Very simply because if there's a lower cost of debt, everybody has more capital. If you have more capital, you're more likely to invest and you're also more likely to spend. So all these companies and all these stocks, of course, are going to have more income, which is why it's positive, ladies and gentlemen. Let's look at what's been happening to the US dollar today. The US dollar today moving sideways is understandable, ladies and gentlemen, because of course we are looking at a major announcement. So we need more volatility there to help us. But we are looking at higher bond yields today. Bond yields are up 32 points. And because they're up 32 points, ladies and gentlemen, that is known to pressure the stock market, but it's going to become irrelevant depending on this announcement, guys. So we've got a couple of seconds now. Let's look at the announcement and then we'll share a different slide. There we go. And we're looking at, guys, equities have just shot lower. Let's see what's actually been announced. Let's refresh the page. It's pending. Equity, though, are very much lower than previously. Look at the non-farm payroll figure, ladies and gentlemen. Non-farm payroll so high, and this is why it's important to wait for the announcement. Very, very high non-farm payroll figure, ladies and gentlemen. So what did we say? If the non-farm payroll figure is going to stay higher, and look at the unemployment rate, guys. The unemployment rate, again, I just said, consecutively stays again and again at 3.7%. If it stays at 3.7%, it's good for the US dollar, negative for stocks. The average hourly earnings, this is extremely, extremely high. If we go back, this is the highest that we have seen in over 2 years, ladies and gentlemen. So let's share the MT4, guys. Look at the price movement. Such a strong downward price movement. We're talking about in a couple of seconds, ladies and gentlemen, the price of the NASDAQ has declined by more than 0.5% in less than a minute. So let's look at technical analysis. Let's start looking at getting a good understanding of what type of price movement we're going to see going forward. Now, if we're looking at longer term timeframes, keep in mind throughout the past 12 months, the NASDAQ has had such strong price movements and upward price movements. Now, because of that, of course, it's going to be it's still trading in the upper half of the Bollinger Band. Is still trading above the 100 simple moving average and the 200 simple moving average. Now, as the price declines, let me change the line of the color, so it's clearer for everybody to see. There we go, make it yellow. So people should keep in mind at that point where we go below the Bollinger Band, and then these support levels here. So these trend lines, the 100-day moving average, the 200 bar moving average as well, they can act as support points. But here, if we're going to drop below the Bollinger Band into the sell area of the Bollinger Band, then that's further indication of the price declining further. But we can see definitely the price is declining. Now, people who are considering if the price is going to continue declining, keep in mind, after we get a lot of volatility like this, we will definitely get some sort of correction. So keep that in mind. This is a very important setup. We're still looking at the NASDAQ future here. This is a 2-hour setup though. Here, ladies and gentlemen, we've got what is known as a sentiment line. So this gives us an indication on the price sentiment. This is a 75 bar exponential moving average, this green line here. And then we've got our RSI here as well. Now, if the price is trading above the sentiment line, and if it's trading above the RSI like here, then it is indicating that the price indeed can significantly increase in value. But keep in mind the fact that the price is declining, we of course aren't looking at potential in terms of indications and technical analysis for the price to increase at the moment, and that is solely based on indicators. But ladies and gentlemen, if it maintains momentum, and if it's going to decline below this level here, so for example, if it declines below 70,482, we're going to get into a scenario where it's going to decline below the sentiment line. Also, the RSI is going to drop below 50. 50 is the neutral area, ladies and gentlemen. So if it declines below 50, but it's still above 25, so it's in that region. So for example, I'll give you an example where we've been in that region. Here we can see we're between that region here. So if we're looking at between this region, we're looking at the price declined at some point up to almost 2.40%. So that's a very strong decline, guys. So keep that in mind. That RSI is extremely important. So if we're going to drop below 50 and we're going to drop below the sentiment line, keep in mind when it does have a crossover, sometimes it can correct back to the sentiment line. So not a very strong long-term upward movement, but a slight correction back to the sentiment line if it crosses below. But if it does cross below, keep in mind that we're looking at possibility and indication for the price of the NASDAQ to decrease in value. If we're looking at our smaller term time frame, the 5-minute time frame, ladies and gentlemen, we can see here clear indications of the price decreasing in value. Now, some people are going to say to me, at what point can I then start to trade at the downward price movement? Now, what you can do is you can actually hold here like this. the Fibonacci levels. So here we've got the Fibonacci levels, ladies and gentlemen. Now, as we cross below the Fibonacci levels, we of course now, like I said, there's a lot of occasions where it corrects. So don't be surprised if it's going to correct all the way back to that previous price movement, because as it declines, it actually triggers pending orders, because a lot of people here have pending orders. So even without them pressing buy, it automatically opens buys, because people, what they do is they say, yes, I want to buy, but I want to buy at the lowest price possible. So they open pending orders. So this is why a lot of the time you get corrections. Also, people try and purchase the discounted price as well. But as it makes its way up, if it makes its way up, or for example here, it made its way up here, and then it crossed below, each time it crosses below, you can use that as a trigger point to sell. So for example, you could have sold at this level here, and you can see since that, we've got scalpers here, ladies and gentlemen, anybody trading there and traded downwards, already in the space of a couple of seconds, just by using the Fibonacci level there, you're looking at 0.07%, which is normally around what scalpers are looking to trade. Scalpers normally try and trade and earn 0.07, 0.08, 0.09, maximum around there, very max. If we're looking at scalpers, of course, we've got individuals looking at different methodologies within the market, which is absolutely fine. But if we get upward price movement again, for example, ladies and gentlemen, if it's going to increase back up to here, each time it crosses below one of these levels, you can use that to indicate and speculate downward price movement potentially. Now, somebody wants to lower the risk of a specific trade. Instead of opening a large trade, let's say if you're going to use these at trigger points, let's say below the 61.8. So let's say it increases to this yellow, and then as soon as it crosses below the 61.8, they'll speculate downwards. If you want to mitigate the risk and lower the risk, what you can actually do, instead of opening, let's say, one lot at that level, at this level here, ladies and gentlemen, you can open 0.25%. So a lower trade. Here, another 0.25%. And here, another 0.25%. Again, here, another 0.25%. So instead of opening at one price and you're dependent on being correct at that price there, instead of doing that, you can mitigate the risk. You're spreading the same level, so you're not trading more, still the same size trade, but you're just having it scaled in rather than a single trade. And you can still have the same target. So your target here could be the 0 point down here. Still, it's the same target. Again, it doesn't mean you're putting your targets further away. So keep that in mind as well. Now, if we're looking at the regression channel has up to date over the past 48 hours been given buy signals. Those buy signals have been very strong. Those buy signals have ended. We're in the danger zone at the moment. We're in the red zone of the regression channel, and we're attempting to break below that level. So you can see here, we're really trying to break below that level. This level can act as a support potentially, but because it's being driven by fundamentals, actually it's not. So it's if we cross below these levels, we're getting materializing more potential sell signals as well. Now, as I promised, we are going to look at different assets as well. We had a lot of individuals asking about gold. So let's look at gold, of course, as well. And the last thing I will state here as well on this last chart is the stochastic oscillator. So if you look at this blue and red line, we can see the stochastic oscillator has crossed downwards. So the bearish downward crossover is also an indication of a potential sell and speculating downward price movement. Now, if we go back to the 4-hour chart and we actually look at gold instead, because we had some people ask about gold, you can see, ladies and gentlemen, gold is now trading below the Bollinger Band. It was trading below the Bollinger Band here, so we had the signal here, ladies and gentlemen, to start to sell. Since that indication, we actually declined 0.36%, so very strong price movement, a lot of price movement in favor of the signal. And in addition to that, ladies and gentlemen, we're now trading actually at the moment below the 200 bar, exponential moving average, and we're also below the 100. We're above the 100 by getting closer to the 100. Now, the fact we're below the 200 starts to indicate that potentially we're seeing a change in sentiment to the market into indicating a potential decline. Now, keep in mind this is a 4-hour time frame, so it's medium term, short to medium term. So, of course, you still have to be looking at smaller time frames to be pinpointing exactly where potentially you're going to look to enter the market. And as you can see, even as we're speaking, we're going to that 100 bar, 100 bar EMA. So we can see it's still declining even as we're speaking. So you can see the importance of these indicators. Now, if we're looking at the stochastic oscillator here, you can see the latest oscillator has pointing downwards. The latest crossover is indicating downward price movement. If we're looking at the RSI here on the 4-hour, we're currently at 46. So we're below 50. So it's indicating downward price movement. You can definitely see the price action is downward as well. And also, in addition to this as well, we're below the signal line on the MACD. Ideally, we want these to continue to decline and start to go into a negative region like this. Of course, that may take some time. That's potentially something we may see on Monday, Tuesday, if this maintains momentum. But nonetheless, we really get indications here of downward price movements. And instead, if we look at this setup, ladies and gentlemen, here we can actually see that we're still on the 2-hour chart, still abiding at the moment. So it may not stay that way, but at the moment, we're still abiding by the trend line. So you can still see here, 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 and here, and here. We're still seeing higher highs. We're still seeing higher lows as well. Of course, we need to give it time. The announcement has only been made for 11 minutes. So keep that in mind as well. So that if it breaks below this level, then it's really an indication of a correction. For example, if we're looking at a correction, and again, guys, we can use the Fibonacci levels here. Now, some people are against the Fibonacci levels. Of course, there's a lot of educators, a lot of economists in the market who say, these Fibonacci levels are irrelevant because it's based on theory. Each trend is different, so you can't use the same levels and so on and so forth. But it does help with in beginners because it pinpoints exactly where potentially you can enter the market. As long as your medium-term outlook is correct, as long as at the end of the day it's going to come to this level, it's irrelevant if you're going to buy at this level or slightly below that, or slightly higher, it's irrelevant. As long as your overall analysis is correct, that's the main importance. So you can use this level here as well to assist. Now, if we're going to cross below, for example, the 61.8, which is a very important level, a lot of people use that as the signal to indicate the decline. That's really a great level because we're below the sentiment line there. Probably the sentiment line will start to point downwards by that time. It's below the trend line as well. So here, potentially enough momentum to start really indicate downward price movement. The only thing that you should be careful of, though, is if we get to that level, then potentially we've had quite a lot of price movement in favor of that direction. So when that happens, a retracement can also form. So be slightly cautious that it's not, for example, at that level, going to do something, for example, let's say if it declines to here, starts to move upwards, and then starts to move downwards thereafter, because you don't want to get stuck in that upward price movement, even though your overall analysis is correct. So you need to be cautious of that. But at the moment, nonetheless, the indication is downward price movement. We're below the 50 on the RSI. We're currently at 45. We're currently at the sentiment line. But we're trying to attempt to stabilize below. If we do stabilize below, again, indication of downward price movement. So here, for example, you can see the upward price movement here. If it gains momentum more downwards, you can, of course, use a signal and trade downwards. You can switch to a 1-minute chart if you want to wait for the crossover, which is absolutely fine. So, for example, here, the latest crossover is upwards. If you want to wait for that next downward crossover, what does a downward crossover look like? This is a downward crossover here, guys. This is a downward crossover. So you can use the 1-minute chart to wait for that next downward crossover to indicate the next movement downwards, which is absolutely fine. But on the 5 minutes, latest indications are downward price movements on gold. So this is the latest crossover. It's a bearish crossover, downward crossover. MACD's in the negative zone, and the bars are below the signal line as well. So we've got a lot of indications of downward price movement. Now, if we're looking at gold and we're looking at regression channel, we're very far below the regression channel. So we need to be slightly cautious that we're not going to become oversold, in which case it may correct, may retrace, but still getting a lot of signals to sell. Now let's start looking at the last asset we'll look at today, which is actually we won't look at the Euro USD today. We'll look at the pound against the US dollar for a change. Here we can see we're below both the 100 and 200 simple moving averages. We're below on the negative side of the Bollinger Bands. The latest crossover here on the stochastic oscillator is a bearish crossover. And also the RSI is currently at 46. So all here indications of downward price movement. Again, the only thing to be cautious of, this is a very big candlestick. So you need to really be cautious of if it's going to become oversold. So how do we get an indication if it's going to become oversold? If you switch to a 5-minute time frame, or you may even wish to look at a 10 minutes instead, which is absolutely fine. So here, for example, we have a 10 minutes. Still got indications here of downward price movement for sure, 100%. Let's sorry, apologize. Let's put the pound against the US dollar here on the chart. There we go. Now, what you can do on the 5 minutes is actually add a relative strength index. So if you go to insert indicators, oscillator, relative strength index, it'll bring up a chart like this. We put a period of, for example, 16. You can see it's currently oversold. What you can do is you can increase it slightly because we're related to news, but we're still oversold, ladies and gentlemen. So you need to be cautious that here it doesn't start to move sideways or doesn't start to increase upwards. Now, if it does increase upwards, for example, if it increases, let's say to here, it will move out of the oversold area. If it does, then potentially again, you can look at where there will start to be opportunities of after the retracement, downward price movement. Now, if we look at the 2-hour time frame and look at the pound against the US dollar, we can see we're below the sentiment line. So we're starting to get signals of downward price movement below the neutral as well on the RSI. So we have indications here that sellers are controlling the market. If we're going to look at the regression channel, let's have a look at the regression channel. Let's actually go to a 15-minute time frame. Regression channel, you can see here the stochastic oscillators actually was seeing divergence. So even though it was upward price movement, it's actually started to move downwards. So that was an indication of downward price movement, reconfirms the downward price movement we're seeing. We're below the regression channel. The regression channel starting to form and widen downwards. So again, a lot of indications there of downward price movement, of course. Now, ladies and gentlemen, that brings us to the end of today's webinar and live stream, because we have been speaking now actually for quite a few minutes. We wanted to keep, of course, live stream webinars and live analysis to 30 to 40 minutes, because of course time is money. Everybody needs to trade, everybody needs to do their analysis, but what we do want to do is give as much assistance as possible. Now, if anybody has any questions, they're more than welcome to ask questions at the moment. Just to recap, we're getting a lot of signals that the dollar can increase in value significantly, also that equities can significantly decrease in value. Of course, that is going to massively also depend on earnings that we're going to see over the upcoming days. For example, the S&P 500 will have a lot of earnings next week, so that will be very important. But if anybody has any questions, feel free to ask now. Otherwise, we'll end today's session. Cannot see any questions, so let's end today's session, ladies and gentlemen. Trade safe, trade responsibly, as always. If you do have any questions, feel free to get into contact with us. In the meantime, enjoy the rest of your day and your weekend, and hopefully we'll see you again on our next free webinar. In the meantime, goodbye.